Inflation is back, and it's eating your savings alive. A dollar today buys less than it did yesterday. Government prints trillions, central banks scramble, and everyday people, they're looking for an escape hatch. Enter Bitcoin, the digital gold, the inflation killer, or so the story goes. But is it really a hedge? When inflation spikes, does Bitcoin protect your wealth, or just add more chaos to the fire? Tonight, we rip open the data, the history, and the hard truths. No hype, no slogans, just the numbers and what they mean for your money. This is the showdown you can't afford to miss. Let's find out who wins, and let's see if Bitcoin is a real hedge against inflation. Inshallah, if God wills. Okay, so let's go and let's talk about inflation versus crypto. And let's answer the question, is Bitcoin a real hedge against inflation? And this is going to be an online, in-depth analysis. Let's get into it. So what is inflation in the first place? Inflation is going to be the sustained increase in the general price level of goods and services in an economy over a period of time. And the key effect, it erodes purchasing power. Simply put, your money buys you less than it did before, meaning that it's going to cost you more money for certain things than it did within the past. That's because sometimes the dollar loses value. So this is why people invest in things such as diamond, gold, and now we have things like Bitcoin, which is going to be a representative of kind of like a online version of gold. We don't completely know how much gold is available. We don't know how many diamonds are available either, but we do know how much Bitcoin is going to be available. And Bitcoin has a cap of around 21 million of it. So you know how much of it is going to be left available to buy, and the scarcity is already going to be implemented and set in stone, unlike certain other things like gold or diamonds. So for example, let's talk about some inflation, right? The power of your money. So in 1990, right, a cup of coffee cost $1. So that means a $20 bill will buy you 20 coffees, And in 2024, the same coffee will cost you $3.50, meaning that a $20 bill would now only buy you 5 coffees. Significant difference, It might seem like a slight increase, going from $1 to $1.50, but it's actually a big increase over time, especially when it comes to real estate, apartments, houses, etc. Rent, mortgage, and stuff. Back in the day, houses were a lot cheaper. Now things are a lot more expensive, a lot more lucrative, and just changing in certain ways. So the main causes of inflation, right? So inflation comes from multiple factors. One, it comes from the fiat currency, and the fiat currency is going to be whatever government that you're involved with. Say you live in Thailand, then you're going to be working with the baht. If you're in China, then you're working with China's currency. If you're in the US, you're going to be working with the US dollar, etc. That's what fiat currency is, your country's currency. So inflation comes from demand pull inflation. So too much money chasing too few goods. This happens when strong consumer demand outpaces the economy's ability to produce goods and services. And cost push inflation. Production costs rise. This occurs when the cost of raw materials, oil, or wages increase, forcing companies to raise their prices to protect margins. And built-in monetary, expectations and money supply. So workers expect higher prices and demand higher wages. It also includes rapid expansion of the money supply by central banks. So we're keeping certain things in context. We know things can get expensive. We know things progress over time, but we have to understand why and how we can protect ourselves from this. Investing is going to be a strong way. When you're investing within the future, your dollar is going to be a lot more worth your while. Money is a tool to generate more income, whether you're investing in ads, buying stocks, crypto, etc. It's a tool to generate more income, and use it as such, not just to consume. So the problem, why we need a hedge, it erodes savings. The value of cash saved in a bank decreases in real terms. A $10,000 savings account loses purchasing power every single year that inflation is high. Once again, this is why investing is going to be your good bread and butter in order to counter this stuff. And discourages investment. High uncertainty over future inflation can make businesses and individuals hesitant to commit to long-term projects and investments. Because they're going to be worried about, well, are things going to just get more expensive? Are things just going to keep increasing over time in a way that I'm not going to be able to handle? So that's when inflation throws in the mix in. So it's really a question of, what can we do to counter this? And once again, it's going to be invest, inshallah. So redistributes wealth. It disproportionately hurts those on fixed incomes, like retirees, for example. Say someone's living off dividend income. okay, like a ETF, crypto ETF, or even just profits, right? As things get more expensive, your dollar is worth less, okay? That big giant trade that you hit, or your dividend income that's coming every month is then going to be just worth less since the economy is just going in a different direction. Okay, so we have to come up with ways of how we can keep our income afloat and what we can invest in to keep the money cycle always flowing. Okay, so it creates uncertainty, makes long-term financial planning extremely difficult for families trying to save for college or retirement, buy houses, and for corporations planning new factories, for example, as well too. A lot of factors that go into this. Okay. So, what is an inflation hedge? Okay, so let's talk about the definition, right? So, an inflation hedge is an investment asset that is intended to protect against the decreased purchasing power of a currency that results from inflation. And how it works. So, its value should, in theory, increase or at least remain stable during periods of high inflation, preserving one's real wealth. Okay, and some traditional examples, right? Gold. Okay, it's a physical asset with a long history of a store value, where you can create jewelry with it, okay, create companies with it, okay, whether it's going to be a gold lending thing for something like that, okay, whatever you want to do, okay, horseshoes, whatever. Real estate, okay, it's physical property, and the rents it generates tend to rise with inflation. That's why you're going to see your rent get higher and higher and higher sometimes in certain cases, okay. And tips, okay, treasury inflation protected securities are bonds specifically designed to offset inflation in a lot of cases and scenarios. So let's talk about the argument for Bitcoin as a hedge, right? The digital gold thesis. So it's a finite supply amount of Bitcoin. Keep that in mind. So mathematical scarcity is going to be implemented. The Bitcoin protocol strictly limits the total supply to 21 million coins. Unlike fiat currency, which can be unlimited, central banks cannot simply print more Bitcoin to fund spending. As we know, Bitcoin is created by power, POWs, so it requires a very extensive and powerful computer with a good graphics card in order to mine the Bitcoin, which uses a lot of power, okay? And decentralization is going to be into place. No central control, and it operates on a global distributed network outside the control of any single government or financial institution, making it resistant to national monetary policy failures, okay? And global accessibility. It's a borderless asset, so it can be traded anywhere through all countries at any time instantly. Very, very useful. And it can be accessed and transferred 24/7 across borders, acting as a potential escape from a rapidly devaluing national currency. And the argument against Bitcoin as a hedge, right? The risky asset thesis. Extreme volatility. A hedge is supposed to provide stability, and Bitcoin's price regularly fluctuates by 10% or more in a single day. This is the behavior of a speculative asset, not a stable store of value. And high correlation with stocks too. If you check out the Bitcoin chart, you look at the stock chart, very, very similar in a lot of ways. Okay. In recent years, Bitcoin has often behaved like a high-risk tech stock, a risk-on asset. When inflation fears spooked markets, Bitcoin often fell with the stock market, okay, failing its one job as a hedge. So sometimes it can mirror the stock market or the S&P 500 or NASDAQ a lot of times too. So in the lack of long-term data. So Bitcoin is only about 15 years old, and gold has been a store of value for millennia, and there's no data on how Bitcoin behaves during a prolonged inflationary period, okay? And we've seen certain times like COVID in the past where it took significant dumps, but what changes a lot of things is the government getting involved. Now that the SEC and the government is able to have control and own Bitcoin in a manner where they can benefit as well too, I can see things going in a lot more positive direction, if God wills. So some head-to-head comparison, right? Let's talk about Bitcoin versus gold in the first place. So scarcity, right? Bitcoin, it's finite, okay? It's not infinite, it's finite, okay? It's finite. So that means that it's capped. There's going to be 21 million Bitcoin available. And gold, right? Gold is going to be physically scarce, okay? So some new discoveries come in as we explore more land within the earth and stuff like that too. But for the most part, gold is going to be scarce. And Bitcoin, right? Bitcoin's 15 years old. Gold, we've known of gold for like 5,000 plus years, okay? And the volatility of Bitcoin can be extremely high, which can be a very positive thing if you buy certain dips as well too. So not all negative. And the volatility of gold can be relatively low, but gold year after year seems to be going up in a very consistent uptrend. And storage, as far as holding gold, right? You can hold gold as well too. You can buy certain ETFs, buy certain shares, or buy the gold futures as well too. But you can, for the most part, buy physical bars, buy jewelry, buy Rolexes, any type of watches, chains, etc. as well too, can be melted for more gold. Okay. And Bitcoin is going to be held digitally, can be held on a USB stick or cold wallet as well too, in case you don't want to hold any of your crypto on the internet. And portability is very, very high. You can put your crypto anywhere. You can spend your crypto on a card too. You don't even have to send it over to your bank account. You could just get a card, depending on your crypto broker, send your crypto and spend your crypto like that. And portability for gold, it's going to be pretty low. Okay, it's pretty heavy for a lot of the times, carrying all those gold bars, and you got to know where to sell it too. So Bitcoin's going to be online. You can use your online money anytime, anywhere, and really help you out. Inshallah. I know there's been times where my bank, for example, has been doing maintenance at the middle of the night, and I've really needed it, and I had to come in clutch and use some crypto. So thank God that was an option for me. Okay, so the primary use case for Bitcoin is going to be for speculation. Speculation within the trading environment means that you're betting on a certain direction. Okay, and for transferring, okay, for spending your money too. And for gold, right? You buying gold bars for store value, for jewelry, or if you're just in the industry in general. Okay. So here's a real world case study here. The 2021 to 2023 inflation surge, right? What happened? So from 2021 to 2022, inflation in the US and Europe surged to 40-year highs, driven by supply chain issues and stimulus. Okay. And what did Bitcoin do? After peaking in the late 2021, Bitcoin's price crashed by over 70% during 2022, precisely when inflation was at its worst. Now, granted, it's not the best example to look at this due to the fact that at this time, there was a lot of laws and regulations and stuff that hasn't been completely passed yet. So we got to keep that into manner in case too. Okay, so not everything was as proper as it should have been right at the time of all of this stuff was occurring. Okay, so keep that in mind. Okay, don't forget about that. So now the government has a lot more control over things. So things have changed. Okay, so conclusion. What is Bitcoin, right? A nuanced view of it. So it's not a reliable short-term hedge, for example, right now. So the data clearly shows that it's too volatile and too correlated with risk assets like tech stocks, for example, and mirrors the NASDAQ to reliably protect purchasing power month to month. So it can't really fight against the stock market, but it is going to be a good source of value to have due to the fact that it's a finite resource. Stocks, for the most part, are going to be and an available resource in an abundance. Is pretty much who has like the most of it. But Bitcoin, there is a limited amount. And Bitcoin, and maybe a long-term store of value, right? The digital scarcity argument remains compelling. And once again, it gives you the ability to send money instantly across the world. That's a huge plus. You cannot do that with normal fiat currency. If you try to send a wire transfer to somebody in another country, it's going to be pretty difficult. But if you send it very crypto, it's instant, just like that. Very, very simple, very clean, very, very useful within the future. So over a 5 to 10 year horizon, it has outperformed fiat currency. And this is a growth and scarcity bet, not a classic inflation hedge. Okay, so keep that in mind. So some key takeaways from this class, right? Inflation. It's a persistent rise in price that erodes purchasing power, driven by demand, cost, and a monetary supply. And a hedge. It's meant to provide stability and protect value during inflationary times. Traditional examples include gold and real estate. And Bitcoin's pro argument is based on its finite supply of 21 million and decentralization, meaning that it's not controlled by a government body or entity. Okay, it's free for everyone to use, person to person, peer-to-peer transactions, making it a digital gold. And Bitcoin's con argument, right, is that it's extremely volatile in certain times and has high correlation with tech stocks, making it a speculative asset. And the verdict. Bitcoin has not yet proven to be a reliable inflation hedge, since once again it does mirror the economy, but we got to give it time as more laws and stuff like that get regulated and passed, especially in the short term. So it's better understood as a high risk, high growth asset class based on the concept of digital scarcity. Okay. So leave questions in the comments below. Stay prayed up to God, keep grinding, and head over to StackMODE.net for all trading mentorship. Peace.